Hey, Bulls and Bears YouTube family. It is Thursday, February 10th, 2022. We have more inflation warnings coming out. We're going to tell you who is giving the warnings and why. We have a worsening situation with the rising prices. At the same time, we're also seeing higher interest rates on the horizon. And new evidence just came out here in the past 24 hours that's telling us that interest rates are likely going to continue to rise, including mortgage rates. So let's talk about the economy, the financial markets, and more. And folks, we're going into a very interesting time. It's already been very interesting up until now, but going forward, it's going to get even more interesting. Here's why: we have conflicting forces or opposing forces in these markets. On the one hand, we have banks that at the current point are more deregulated than at any point in history, period. Banks can loan out endless amounts of money. There's zero reserve requirement, so that's inflationary. Anytime people can borrow money and the banks do not have to worry about keeping any money in reserves, that is inflationary. More borrowing creates more spending creates more inflation. I think most of you know that by now, pretty simple. But yes, very important. If people are not talking about this on their financial news, you might want to leave them a comment and tell them, to talk about this. It's very important. Nobody's talking about this. Zero reserve requirement, inflationary. On the other hand, deflationary is the rising interest rates. Also pretty simple. The higher the interest rate, the more the payment's going to be. The higher the monthly payment, the less people can qualify for. So unless all the lending guidelines continue to get looser, rising interest rates are going to be one of the deflationary forces. But we have these forces going against each other, again, opposing forces. I continue to see the inflationary forces beating the deflationary forces. You would think that prices rising everywhere would be impacting people's ability to borrow money because wages aren't keeping up with rising prices. But yet we still see home prices go up. We still see car prices going up because we have these other forces that are also inflationary. What are those? Shortages, supply chain disruptions, labor issues, worker shortages, people checking out of the labor force, not wanting to go to work, people retiring early. Honestly, a lot of people too sick to go to work, sick, one, physically, and two, mentally exhausted because they see that a lot of times working 9 to 5 is a no-win situation. You're going to go to work and break your back in many cases and still not going to be any further ahead than the person that's just sitting back collecting some sort of other type of paycheck. All right, but let's take a look at the most recent data here, most recent news. January numbers are out. Inflation another 7.5% on an annual basis. Now remember, this is the official number. The real number is over 15% now. The December number was closer to 7%, so things are getting worse. Just like we told you here, things are not going to be getting better anytime soon as far as rising prices go. Now, what's been portrayed by a lot of the news outlets out there is that inflation is good. People's home prices are going up, their values are going up. That means they're getting richer because the home they live in is worth more. Well, if that's the case, why not root for, why not hope for $10 a gallon gas, $20 a gallon gas? Instead of saying, oh, we're going to pay more for gas, that's a bad thing. No, everybody's getting rich. The gas in your tank is worth more now, right? So we should want prices to rise. Everybody's getting rich. The fuel in your tank, maybe in 3 months will be worth twice as much as it is now. So that's a good thing. Everybody's getting rich. Or is it everybody's getting further in debt, paying more, while at the same time the incomes and wages are not keeping up? All right, it's pretty crazy how some people try to spin, these numbers. But yes, the real inflation number closer to 15%. Another month that was worse than the previous month. So the trend continues to be rising prices. We told you here years ago this was going to be the trend. Until something pulls a plug on this, all the inflationary forces The banks need to be further regulated, and I think they need to be shut down. But to take it just the first step needs to be some sort of tighter regulations on these banks. The problem is the quote unquote leaders, they need to keep this ball game going into extra innings for as long as possible. If the banks get shut down or even tighter regulations or restrictions, it's going to cause this thing to implode. Deflation will therefore outweigh the inflationary pressures. So they have to keep deregulation. They have to allow the banks to continue to loan out unlimited amounts of money, bigger and bigger loans, so people can quote unquote continue to buy stuff. And I put the word buy in parentheses because if you buy something on credit, if you take out a huge loan to buy something, are you really buying it? Well, you may be buying it, but is it really yours if it's financed? And again, that's the situation we have today with most homeowners. Most people that quote unquote own their homes are financing their homes. Most people have a mortgage. Most homeowners, I should say, have a mortgage. So yes, inflation, 40-year plus high, continues to worsen, just like we talked about here. More pain at the pump. Let's talk about oil prices. Crude today hanging well over $91. Again, we told you this was going to happen. There was the drop down. People said we were wrong. No, this is going to continue to get worse. People feeling the biggest pain are people that have to drive, to get to work. People that are just driving for pleasure or on vacations, they can choose not to do those things. Those are options. People that have to drive to get from point A to point B for their job, school, etc., are going to feel the most pain here. Will this be more people dropping out of school, quitting their jobs? We'll have to see. AP gives us a nice chart here of all the higher costs that people are having to pay. Now, they talk about the rising prices are the worst in 40 years or since the early 80s. Well, it's actually worse than that. The pace is the worst in 40 years, but prices compared to 40 years ago are much higher overall. And we're looking at a year-over-year number. It's much worse if you look at 2 years going back. But used cars and trucks over the year over 40%, hotels up over 20%, furniture and bedding 17%, beef and veal up 16%, eggs 13%, electricity almost 11%, major appliances almost 10%, cereal and bakery products almost 7%, restaurants over 6%, airline fares almost 5%, rent, well, that's a low number there, over 4%. In some cities, it's double digits and beyond. Cable, satellite TV, 4.3%. There's a lot of households out there that need to make the decision, what can you live without? Can you live without cable TV? Can you live without that extra vacation? I know many households that think about that and many that don't. I have some friends, they're going to take as many vacations as they want to. They're going to file bankruptcy. That's their plan. Once they file bankruptcy, discharge the debt, do it all over again. So we have all these incentives for people just to continue to rack up debt, including bankruptcy. People know that's a get out of jail free card, essentially. And that's another inflationary pressure. It's going to keep a certain amount of people spending. Not everybody, but certain people do have that mentality that, hey, I can just file bankruptcy. It doesn't matter how much I spend because there's always the safety net. And that safety net, folks, is another inflationary force. The Journal just came out with a study that says the average household is paying about $250 extra per month with all of these higher prices. That may not seem like much when you look at it on a month-to-month basis, but it's about $3,000 a year. And do you know anyone that's getting a $3,000 a year raise? Well, I hope you are. But most people, especially in the bottom 90%, are not. All right, we're going to wrap this one up here. Fasten your seatbelts, folks. Prepare accordingly. This thing is just getting started. Prices are going to continue to rise. I expect similar numbers to come out for the month of February. Of course, we can't talk about those until March. But please come back for more updates. Invest accordingly. Prepare accordingly. Keep stacking. Stay safe, people. Big love. Bye.